Have you ever wondered if there's a hidden gem in the investment world that could potentially provide you with solid returns and tax benefits? Hold on to your seats, because today we're diving deep into the fascinating world of master limited partnerships, or MLPs. But first, let me ask you a small favor. If you enjoy learning about unique investment opportunities like this, please take a moment to like, share, subscribe, and hit the notification bell to stay updated on all our future videos. Now, let's dive into the world of MLPs. Picture this. You're a savvy investor who's always on the lookout for new and exciting opportunities. You've heard whispers of this lesser-known investment vehicle that combines the benefits of stocks and partnerships, offering potentially higher yields and tax advantages. Intrigued? Welcome to the world of master limited partnerships. Let's start by exploring what MLPs are. An MLP is a publicly traded partnership that operates like a hybrid between a stock and a partnership. This unique structure allows MLPs to distribute a large portion of their cash flow to their unitholders, which can result in attractive yields for investors. So how do these magical MLPs work, you ask? Well, imagine you're a baker who loves making dough, both the edible and financial kind. You decide to team up with a friend who has a top-notch oven. You create a partnership where you both contribute your skills and resources and share the profits. This partnership is like an MLP, where various parties come together and pool their resources for mutual benefit. Now, not all MLPs are created equal. There are two main types: general partners, who manage the daily operations of the MLP, and limited partners, who invest in the partnership and receive distributions. MLPs are often found in sectors like energy, natural resources, and real estate. You're probably thinking, why should I invest in MLPs? Well, I've got three words for you: yields, diversification, and taxes. MLPs often offer higher yields compared to traditional stocks and bonds, which can be music to an income-seeking investor's ears. They also help diversify your portfolio by offering exposure to different sectors. And as for taxes, MLPs have unique tax benefits that can reduce your overall tax burden. But as with any investment, there are risks involved. MLPs can be sensitive to economic conditions, and their performance is often tied to the sectors they operate in. Plus, the unique tax structure of MLPs can make filing your taxes more complex. Feeling ready to take the plunge into the world of MLPs? Well, you can invest in them directly by purchasing individual MLP units or indirectly through MLP-focused exchange-traded funds, ETFs, and mutual funds. For a smoother ride on the MLP roller coaster, consider diversifying across various sectors and investment vehicles. Before we dive in further, don't forget to check out the description box below for valuable resources. Trust me, you don't want to miss out on these goodies. Alright, now let's take a closer look at one of the most popular sectors for MLPs: energy infrastructure. Many MLPs own and operate assets like pipelines, storage facilities, and processing plants for oil and natural gas. These MLPs typically generate stable cash flows from long-term contracts, making them an attractive option for income-seeking investors. And since energy demand is likely to remain consistent over time, investing in energy infrastructure MLPs can offer some degree of predictability. You might be wondering how MLPs compare to another popular income-generating investment: real estate investment trusts, or REITs. While both offer high yields and unique tax benefits, there are some key differences. REITs primarily invest in real estate properties and mortgages, whereas MLPs often focus on natural resources and energy infrastructure. Additionally, REITs are required to distribute at least 90% of their taxable income to shareholders, while MLPs generally have more flexibility in their distribution policies. Before jumping headfirst into the world of MLPs, it's crucial to evaluate them carefully. Here are a few factors to consider. First, the distribution coverage ratio, which indicates an MLP's ability to cover its distributions to unitholders. A higher ratio signifies a safer distribution, while a lower ratio may signal potential cuts in the future. Second, debt levels. Examine the MLP's debt-to-equity ratio and interest coverage ratio to assess the company's financial stability. Third, growth prospects. Research the MLP's growth strategy and future projects to gauge its potential for long-term success. When considering MLPs as an investment, it's important to think about how rising interest rates might affect them. In general, higher interest rates can put downward pressure on MLP unit prices. Why? Because as interest rates rise, investors may shift their focus to other income-generating investments, like bonds, which are perceived as less risky. Additionally, higher interest rates can increase an MLP's borrowing costs, potentially impacting its ability to grow and make distributions. As we discussed, MLPs can offer unique benefits and risks, making them an interesting addition to a well-diversified investment portfolio. By including MLPs alongside other asset classes, such as stocks, bonds, and real estate, you can potentially reduce overall portfolio volatility and enhance your risk-adjusted returns. Just remember, it's essential to tailor your investment strategy to your unique financial goals and risk tolerance. Let's revisit the topic of taxes when it comes to MLPs. While we mentioned that MLPs can provide tax benefits, it's important to understand the complexities involved. For example, MLP distributions are typically treated as a return of capital, which lowers your cost basis and defers taxes until you sell your units. Additionally, investing in MLPs may require filing a Schedule K-1, which can be more complicated than the standard 1099 form. It's crucial to consult with a tax professional before investing in MLPs to ensure you're fully aware of the tax implications. For our international viewers, you might be wondering if investing in MLPs is a good option for you. While non-US investors can indeed invest in MLPs, there may be additional tax implications and complexities. For example, withholding taxes might apply to your MLP distributions. Alright folks, we've covered the ins and outs of master limited partnerships and their unique investment potential. From attractive yields to tax benefits, MLPs might just be the hidden gem you've been looking for to add some sparkle to your investment portfolio. But as always, it's important to remember that every investment comes with its own set of risks, so make sure you do your due diligence and consult with a financial professional before diving in. Now I have a thought-provoking question for you. If you had the opportunity to invest in an MLP, which sector would you choose and why? Let's get a conversation going in the comments section below. I can't wait to hear your thoughts. That's it for today's video on Master Limited Partnerships. I hope you found this information valuable, and as always, happy investing. Until next time.